In 1999, the Redefine Income Fund was established. Its aim was to provide an above-average return on investments in physical property and in listed property securities. Since then, Redefine has grown year on year with a property asset platform valued at 87 billion rand in 2022. In the year 2000, after listing on the JSE and with fewer than 50 employees, we became the largest unit holder of Hyprop Limited. 3 years later, we became the first South African property company to receive a Fitch credit rating, and we acquired the Standard Bank Centre in Cape Town. The following year, Madison Property Fund Managers took on the management of Redefine's assets. And in 2005, in partnership with Hyprop, we completed the 192 million rand South Coast Mall development. 2006 saw the formation of an enterprise development initiative, Dijalo Property Services, which later merged with the Dipula Income Fund as part of a JSE listing. In the same year, Redefine International was floated on the London Stock Exchange's alternative investment market. More acquisitions and joint ventures followed in 2007, and we entered into our first broad-based Black economic empowerment transaction. By 2008, we were fifth largest in the South African listed property index. 2009 was a big year. In a record 12.7 billion rand transaction, the Redefine Income Fund, the property stocks company Apex High, and Madison Property Fund Managers merged to form Redefine Properties Limited, with Mark Wayner as the Chief Executive Officer and over 200 employees. This was the catalyst to what Redefine is today. The following year, Redefine International listed on the JSE as part of a dual listing structure. Until 2011, our property management was outsourced to Broll. To streamline processes and reduce costs, we now internalize this function, supported by HR, legal, marketing, and finance service departments. We also received an investment-grade credit rating from Moody's and listed the Dipula Income Fund on the JSE. In 2012, we launched our new brand and we expanded our offshore exposure through a direct investment in Cromwell Property Group, listed in Australia. In 2013, we acquired 66% of the Fountainhead Property Trust and took on its property management. We also increased our holding in Cromwell, reduced our stake in non-core listed securities, and brought our electricity recoveries in-house. In the same year, we won the tender to develop the Weber Wenzel offices in Sandton, and we introduced our ongoing internal learnership program. 391 learners have gone through the program to date. By 2014, we had become one of the leading South African real estate investment trusts in several key corporate responsibility indices. We acquired a 50% share in North Point Tower in Sydney. In South Africa, we completed our first 4-star green office development, as well as Matlosana Mall in Klerksdorp. 2014 also saw Andrew Koenig appointed as our Chief Executive Officer and our first ever employee engagement survey. 2015 saw further mergers and acquisitions, the establishment of the Redefine Empowerment Trust, and our first official recognition as a top employer in South Africa, an accreditation we have proudly maintained since. In 2016, our acquisition of a 49.9% stake in Echo Polska Properties represented the largest ever real estate investment transaction in Poland and the biggest single purchase by a South African company of income-generating real estate assets in Central Eastern Europe. 2017 saw further integration of acquired local portfolios, 2 exciting new developments entering the pipeline, and in Australia, further expansion in student accommodation. 2018 saw the disposal of Cromwell Property Group for around 3.7 billion rand to bolster liquidity. In the same year, we continued to expand into the fast-paced Polish logistics market, while officially launching Loftus Park, a dynamic, mixed-use green precinct in Pretoria. We also became the REIT with the largest solar footprint in South Africa, with 44 Green Star-rated buildings. In the development space, we completed the Rosebank Link mixed-use office and retail precinct in 2019, and the 155 West Street and Centurion Mall refurbishments. We also announced the start of the construction of a multi-million rand taxi rank opposite Centurion Mall in public-private partnership with the city of Tshwane, and Sipho Pityana was appointed as non-executive chairperson. Then, in 2020, in dealing with the impact of the COVID-19 pandemic, and with the exception of our continued investment in the fast-paced Polish market, we strengthened our balance sheet by recycling several non-core assets. Our governance structures were also strengthened. 100% of non-executive directors are independent and over 60% are female. In 2021, we continued being a force for good. We continued to strengthen our balance sheet by ongoing property asset disposals, and we launched our Moonshot strategy. In 2022, we actioned an organizational restructure of EPP, resulting in Redefine acquiring 95.5% of EPP. In the same year, we developed a sustainability-linked finance framework, testament of our recommitment to making a positive impact in the world. And we also launched Kwena Square. We now have over 500 employees in South Africa with a level 1 BBB2E score and more than 200 employees in Poland. And we own and manage 4.2 million square meters of space in our local portfolio in South Africa and almost 2 million square meters of retail and logistics space in Poland, which we create and manage to change people's lives. 2022 also saw us launch our CSI Employee Volunteering Program, a platform to be a force for good. We look forward to rising to the challenges of further organic growth as we continue our value creation story.